Hello, ladies and gentlemen, and warm welcome to the show, and a very good day wherever you're watching this from. This is SMART24 TV, where we drive your business. And my name is Anthony, here to take you through the financial markets and get to know what's happening currently on the financial markets. And remember, the show here is proudly brought to you by Altex East Africa, your #1 private stock exchange. And they do, of course, bring you now treasury bonds across East Africa with the help of your phone. USSD code is star 290 hash, rather 292 hash, and you will be able to buy bonds across East Africa. And Altex East Africa, of course, is licensed by the Capital Markets Authority to carry out these trades, starting their trades exactly at 15 minutes past the hour of 8 a.m. and ending at 3 p.m. East African Standard Time. Altex do something new. Now, if you're new to the show and you're joining us for the first time, you're very, very, very welcome. Of course, this is the show where we bring you business, but in the side and view of investment. We look at, of course, savers making use of their savings to make a little extra income. That is through being able to invest in several assets in the financial markets. And the financial markets definitely have diverse products as well as different segments and asset classes through which we can invest in, particularly capital markets, having the stock market, the exchange traded funds, derivatives, and other sort of products that help you get a return in the long run. The other products as well we look at here on the financial market scene. We also look at the debt market, where we look at lending to governments and getting yourself a return on that lent money there for a specific period of time. We also do have the collective investment schemes, where for especially the novices, those coming in for the first time, this could be a very helpful way to get into the market and get to understand how this really works. For a long time in Uganda, our saving culture has been a limping one, and of course, statistics show that we're still lacking behind when it comes to savings, with very few people holding bank accounts and also very few people investing those monies they're keeping in their banks for the short and long term. And so this show is here to give you a clue on some of these asset classes that you could consider for yourself to be able to participate in trade and also make a little bit of money off that saving that is lying idle on that bank account, on your mobile money, and so on. And so definitely you have to stay tuned and glued on the show to learn more about that. It is the first day of November, and of course, we are glad to be in the new month. We're thankful for the blessing of the old month. And now, as we get into the new month, of course, closing into the end of the year, coming in the middle of also the fourth quarter, rather, of the year 2022, definitely we must analyze and examine our investments. We must be able to look back and take some lessons from the past and then move forward. And definitely that is, of course, getting to know the current performance, comparing it with the past, and getting to have our prospects set and seeing what the future might be like, and making use of the opportunities, the gaps that are in the markets to be able to get that return. Now, I'll start with the stock market. When you look at the US stock markets last Monday, yesterday, in a downbeat start to a busy week, marked by the Federal Reserve policy, earnings, and jobs data, the S&P 500, the Dow Jones Industrial Average, as well as the Nasdaq, which is a tech-heavy stock declined rather in performance, of course, ahead of the Federal Reserve Bank Policy Committee meeting. Now, the S&P 500, which particularly is a market capitalization weighted index, declined about 0.6%, whereas the Dow Jones Industrial Average, marking about the top 30 companies in the United States, erased about roughly 100 points of their market value there, And the technology-heavy Nasdaq Composite was off by about over 0.8%. Now, equity markets are still poised to round out the month higher than a brutal September slump. Now, of course, in September, if you followed the US stock market, it was one of the worst months that was registered this year and in several years on the US stock market. But the Dow Jones Industrial Average was up 14.4% in the month of, looking at this month of October, which we just concluded. And this 14.4% is making October the 10th best month of the Dow Jones Industrial Average since 1915, meaning it dates way back in the 1900s, looking at the performance of the stocks, particularly on the Dow Jones Industrial Average for the past 1 month. This is month-to-date performance that we're talking about, and you must be very specific and clear about that. Now, we're looking also, according to Bespoke Data Investments Group, the Dow Jones, if the Dow Jones closes today, Tuesday, just 2 points basis higher than Monday, then this October will beat January 1976 as the best month since 1930s. If at all we have the Dow at just 2 extra points on its value there, we shall have the best month-to-date performance on the Dow Jones Industrial Average. Now, the Federal Reserve's next policy announcement Wednesday, and October's monthly employment report set for release this Friday will determine whether the tailwind will continue pushing stocks forward through the rest of 2022. The U.S. Central Bank officials are poised to raise the Fed's benchmark policy rate by another about 75 or rather 0.75% basis points. But some strategists believe this could be the last outsized hike because officials there have also been grappling with this kind of policy interest rate plans, of course, to try to hike it. And so remember, the war is between the rate, the policy rate, as well as also the economy getting back to recovery. And of course, there's been, of course, contention between the Federal Reserve and definitely the stock markets, looking at the yield on the 10-year bonds or 10-year treasury notes, and also the impact on inflation, which of course is the biggest problem here for most of the central banks around the world, not excluding the biggest economy, that is the United States economy. Now, this definitely comes at a time when we as well here in Uganda and Africa are still grappling with high commodity prices. And of course, our central bank here in Uganda recently, on the 6th of October, at the beginning of the month of October, raised the interest rate, that is on the central bank rate, from 9% to 10%, also in a way to curb inflation and try to reduce the prices that were rising extremely out of hand. But this does not go away without impact on the stock market. Of course, as the central bank rate moves upwards, we see most interest rates move in the same direction. And these interest rates also come to impact the coupon rates on the treasury notes or the treasury bond notes or papers there. And so we see that definitely this influences the minds of investors, thinking that why invest in during a time of inflation, during a time of uncertainty, in an uncertain investment? Of course, stocks being one of them. And so you see investors moving towards investing into the debt market, and also especially the long-term treasury notes there, and which is what we're seeing also in the US stock market. And so definitely this is definitely what drives many people between either the stock market or the debt market, and people choose between the two based on the return at the moment. And that's exactly what we are looking at the US stock market, as of course the Federal Reserve Bank, which is the central bank of the United States, comes to sit this Wednesday and Friday as well to have their policy committee meeting. Definitely here in Uganda as well, the central bank rate at 10% has not left things the same. We can see yields on the treasury bonds on the, especially the longer term 20-year, 15-year bonds go up to 18, 17% on the secondary market, and the primary market as well move up to 15 to 16%. And stock markets continue to stumble here at the rather the central bank rate as well. And so that does not go away without any toes being stepped on. And that's why it's very important for you, an investor, to make an analysis of what's happening in the stock market. How about the exchange traded funds? How about the debt markets? How about the treasury bills? How about the collective investment schemes? So you can actually come up with a resolution that is meaningful to invest in a particular way on the stock market or on any other financial markets that you might wish to invest in. Let's come back home to Africa and having a look at some of the stocks here. Definitely we see that on the Uganda Stock Exchange on the last day of the month, that was 31st of October, which we can analyze right now, we see that there was a decline in performance. However, this had little impact on the weekly performance because of still the stronger performance of the stock markets exactly 1 week ago. If you were with us here on the show, you remember starting last week on Monday and Tuesday, there was a good market activity, especially put off by big companies like Umeme, MTN, as well as Stanbic Bank. Well, that is still holding up the markets, but based on the daily performance here, yesterday wasn't that a very active day of trading, not that exciting for many investors. As we can look at, in aggregate, only 4 participants were witnessed on the market, and these 4 participants ended with only 1 gainer, who was a cross-listed company, as well as several losers on the market who were all still these cross-listings. And remember, the problem with cross-listings, or rather not a problem, but probably what we can call the unfortunate bit, is that these cross-listings movements, when it comes to pricing, are influenced most of the times by activity on the primary stock exchange. So you don't find much activity, or even you don't find any single activity on these stocks, much as their prices do move on our stock exchange here in Uganda. So it's nothing really exciting when we look at especially a market where we're having only the cross listings, as per the gainers or the losers, because we understand and know that activity is quite low on some of these counters, and we understand that not many Ugandans have been able to trade into these shares. However, regardless of that, we still had Jubilee Holdings coming at the top of the gainers there at the Uganda Stock Exchange yesterday with an appreciation of close to 0.18%. And on the losing side, we had Centum Investments come out at the bottom. Well, Centum has registered a really, really bad performance recently in as far as price depreciation is concerned. And yesterday it further declined about 2.14%, closing at 260.37 Ugandan shillings per share. Centum Investments is an investment company, just like the name Centum Investments, and it invests in different assets, real estate across East Africa. And investors looking at investing in some of these, companies indirectly, definitely Centum could be one of the ways you can do that. However, I have to warn you, on the Uganda Stock Exchange, Centum recently has registered pretty much less active performance, and also kind of a bullish rather a bearish performance in terms of stock prices here, losing from about 340 on average, like about 3 months ago, to currently we are talking about 260 shillings. That's about 80 shillings lost in value, which is quite significant figure there for you to consider before getting ahead to invest in Centum. However, on the Nairobi Stock Exchange, when you check out Centum, it's actually quite doing well, and you could probably explore some of the opportunity of Centum investments there on the Nairobi market rather than here at the Uganda Stock Exchange. When you look at the other companies that lost, we had Nation Media Group as well, lose at 1.8% for the closing price. We had on the stock exchange here in Uganda, as well as Equity Bank Limited losing at 0.99%, and East African Breweries losing value of about 0.55% of their price there. When we come to the top movers, of course, these are all domestic companies, and surprisingly, there was a new entrant on the list of the top movers, and guess what? Yes, National Insurance Corporation came in at the top of the movers, and National Insurance Corporation had a total volume of 48,000 shares that were traded on the counter here at the Uganda Stock Exchange. And this company was followed by Stanbic Bank Uganda. Stanbic, remember, is the #1 most traded on stock in the last 1 quarter, and also currently still registering very good activity, at least compared to other stocks on the exchange, coming at a 40,170 shares of volume there, whereas MTN Uganda also came in as a 38,480 shares with a slight loss there in value as well. And Wumeme came in at a value of about 7,201 shares. Wumeme in particular, like I said last week, moved the market like crazy after we had about 1.96 billion Ugandan shillings worth of shares traded on one single day on the company. And of course, as Wumeme, we understand definitely very many foreign investors are very interested in this one, as well as different local investors and regional investors as well could be interested so much in Wumeme, and is still coming out as one of the biggest companies in terms of turnovers or the traded volumes as well on the stock exchange. Regarding the performance of the local company index as well as the all-share index, which are the trackers of the aggregate performance of all the listed stocks on the Uganda Stock Exchange, the all-share index, as a result of some poor performance from mainly the local companies, shed off about 5.79 points, which was a 0.46% points decline, closing at 1,257.55. Our index has suffered recently, and market activity has definitely been down and low, especially closing last week and beginning this week. Unlike the beginning of last week, where we had, like I said already, companies like Wumeme have big volumes moving the market, as well as big turnovers on the market as well. The all-share index, like I said, closed at 1,257 points, and this now is representing a 1-week gain of 0.75%. Well, a gain because of still the better, rather very intense activity last Monday and Friday for last week. And the 4-week gain still has been registered of 0.21%. Still regarding 1 month or month-to-date performance, the markets have still improved on average in terms of monthly performance for the month of October by about 0.21% based on the all-share index value. But the overall year-to-date loss has been still maintained above 11%, and precisely speaking, we had about 11.48% lost so far on the all-share index in terms of year-to-date loss there as per yesterday's trades. The local company index, as you would expect, because of these losses, also declined, especially because of the losses on MTN and a few other companies on the local company list also shed off some points to 271.52 points. And this is a 1 week loss of 0.09% and a 4 week loss of 0.063%, whereas a year-to-date loss of 16.37% has been encountered on the local company index. This is data, of course, coming in from the Uganda Stock Exchange, and for our interpretation here, we basically give you what we think should be the right decisions to make based on this data. And of course, it's never too late to come onto the market, and the best time to get in is when the streets are bloody. That's according to Mr. Warren Buffett, one of the biggest investors there. So these figures really shouldn't scare you or help you to maybe become a panic seller, but they should make you a seasoned investor and get to be resilient, especially during this time. We are going to take a quick breather. When we return, we summarize and look at a detailed performance of Wumeme and Stanbic, and also cross over to the Nairobi Stock Exchange and have a look at what took place there as well. We'll be right back. Stay with us. You're watching SMART24 TV.